As you know, I am very heavily involved in microcap investing. However, there are some things that I very much dislike about microcap investors in general. So this is what this video is all about. If you're new to this channel, my name is Mariusz Konieczny. I run MicroCap Explosions, a website dedicated for microcap stocks which are ignored and underfollowed by the investment industry. I also wrote 10 books on investing, one of which is available for a free download at microcapexplosions.com, so make sure you get yourself a copy. I've been doing microcap investing for some time, and I see certain patterns from the microcap investing community. And in this video, I'm going to talk to you about 5 things that I very much dislike about the community. Number 1, they get their microcap ideas from IR people. Most microcap investors get their investment ideas from IR firms or conferences or other investors. They don't go out and find them on their own. They wait for ideas to be fed into them. So they love attending virtual conferences where a bunch of companies present at the same time. They love going on Twitter and following their favorite people, or they just wait for IR firms to reach out to them and feed them these ideas. Not that there's anything wrong with this. The problem is, by the time they get these ideas are distributed to many other people, and just because it has a microcap space, the whole idea behind investing in a microcap space is to go where there's very little competition. But if you get the ideas in the same way that everybody else is getting them, then just because the environment is small in relation to how many people are looking at the idea, you're actually competing with others, and you actually have a lot of competition just because of the way you receive those ideas. Number 2, groupthink. They love to get together, invest in the same ideas at the same time, talk to each other, email each other, and it makes them no different than drunk people drinking Kool-Aid on NASDAQ and talking about the same ideas, the growth, Teslas. It's the same, but just on a different scale. I will never forget when I was talking about mind technology on this channel, how many emails people were sending me about Kraken robotics. Like one day wouldn't go by that I wouldn't receive an email about Kraken robotics. They all thought the same way. They all thought it was a fantastic idea. It was going to the moon. And if you look at the stock price of Kraken robotics, it reached as much as 90 cents per share. And today it's trading about 30 cents per share. Like if you compare it to when I talked about Mind Technologies, because nobody was talking about it. There was no group thinking in Mind Technologies. When I started talking about it, it was at like 190, and now it's like 130. So yes, it's down because the whole industry is down, but because there was not much hype and excitement in Mind, actually the people from Kraken were talking negatively about Mind, but because they were so hyped up, at the same time they had the group think mentality, they are down close to 70%, and investors in Mind Technologies are down not even close to that amount. And it's all because of the group think. Number 3, they get most of their information from the CEO. As I said before many times, when it comes to microcap stocks, you are able to get the CEO on the phone. You are able to get the management on the phone. But most microcap investors, that's where it stops for them. They get on the phone with the CEO, they get excited that someone gives them attention, and they literally believe every word that the CEO is saying. And then they base their investment decisions, everything that the CEO is saying, without fact checking, without talking to others, without talking to clients or anything like that. Nope. Whatever the CEO says, they believe it, and it's like gospel. Number 4, so many of the microcap investors just believe in the hype. When it comes to hype, microcap space is the space. Every single company in the microcap space has the solution to cure cancer, to find the next great gold deposit, to have the best technology on the planet, and the addressable market is so huge, they're going to just make millions. They believe in this hype. There's nothing wrong with believing in something and looking how much growth there is, but they believe in the hype so much that they don't even pay attention to where the revenues are. And I guess the great example recently was Immunoprecise. Everybody was emailing me about Immunoprecise, how great it was, how these super investors invested in it. And even this one guy made a presentation about Immunoprecise saying, what I like about this company is that it has these assets, it's developing, but it also has this business, this service business, like contract service business for pharmaceutical companies. I looked at it, I'm like, so what? That business, that contract business is so tiny, it doesn't even matter. I don't care if it has revenues, but everything is in relation to the market cap. Everything is in relation to the value. If you value the company by this much, but the revenues from that sector aren't this much, and then there's all this hype on this side, it doesn't matter. You know, hype is hype, but when it comes to the microcap space, you have this opportunity out there to find real fantastic companies, but instead they go for the hype. And just their eyes get so big. If you want hype, go to NASDAQ. There's plenty of hype in NASDAQ. There's so much hype in NASDAQ. Like you can find companies that are trading at, 1,000 times revenues, or they don't even have revenues. Like I don't need to go to the microcap space to find hype. I can find hype in plenty other places. Number 5, they don't really do their due diligence. And it kind of ties back to relying everything on what the company is saying, relying everything what the CEO is saying. They don't really truly do their due diligence. I think that the microcap space is riskier as it is, but the due diligence that you can do can set you apart. It can give you an informational advantage, but they just want to listen to the story, believe in the story, without fact-checking everything, without getting on the phone and calling the customers, hey, are you really a customer? Like, why are you using this product? They just believe everything that the management is saying, and whatever they get from the management replaces their due diligence. And then when the companies don't deliver, they are quickly to jump on another story without, of course, any due diligence. Their due diligence consists of watching another investor on YouTube talking about it, who also didn't do any due diligence. In summary, the 5 things that I don't like about microcap investors, not microcap stocks, but microcap investors are: number 1, they get ideas from IR people or conferences or other people. Number 2, they cannot think independently. They are just as much prone to groupthink as people on NASDAQ, so it makes them no difference. Why even bother going to the microcap space? Number 3, they rely on CEO for due diligence and for all the information. Number 4, they believe in the hype that the company presents in the investor presentations, and they also believe in the hype that they get from other investors who are just as much hyped up as they are. And finally, number 5, they don't truly do their due diligence. Watching someone else's YouTube video or reading someone else's tweet is not due diligence. That's, again, groupthink and relying on someone else's work. Do your due diligence, build your own conviction. Thank you for watching, and I hope you enjoyed it. Please subscribe to this channel, click the notification button, leave me a comment and share the video.